What is up, everybody? Welcome back to the Guru Crypto Garage. It is Tuesday, March the 3rd, and today felt like someone strapped a rocket engine to a school bus and aimed it at a brick wall. I have never seen a day like this. So let me tell you exactly what we are covering tonight, because you are going to want to stay for all of it. Iran just closed the Strait of Hormuz. 20% of the world's oil supply shut off like a valve. 7 American soldiers killed in a drone strike on our embassy in Saudi Arabia. Oil blew past $102 a barrel. The stock market crashed 1,200 points at the open, then did a full U-turn on a single Truth Social post from the president. Bitcoin held 68,000 while everything else was on fire. $458 million poured into Bitcoin ETFs in one day. Michael Saylor bought another 5,000 Bitcoin. $1.2 billion fled Iranian exchanges in 4 hours, and Trump told Congress he wants a crypto custody bill passed in 48 hours or he will force it. That is tonight. All of it. Broken down the way we do it in the garage. Now, before we pop the clutch and get after it, do me a favor. Smash that like button right now. Hit the follow and share this with your fellow Degens, or honestly anyone who just wants to understand what is actually happening out here, because in this garage, we break it down so everybody gets it. Let's ride. All right, so here is what actually happened today. The United States and Israel launched a coordinated preemptive strike on Iran. This was not a limited operation. The supreme leader of Iran is dead. Iran responded by closing the Strait of Hormuz, and that is the most important oil choke point on the planet. 150 tankers sitting dead in the water. Hapag-Lloyd suspended all transits. Then Iran launched drone strikes on the U.S. Embassy in Riyadh, Saudi Arabia. 7 of our soldiers confirmed killed. They hit Saudi Aramco facilities. They hit Israel. The Leviathan gas field shut down. Qatar LNG fully offline. Brent crude did not just spike, it blew past $102. Oil up 14% in hours. Then the president gets on Truth Social and announces the Navy will escort every tanker through the strait. Full military protection plus government shipping insurance. That single post triggered a massive short covering rally. The S&P had dropped 2.5% to year-to-date lows. Dow down 1,200 at the open. After that headline, the S&P clawed back to close down less than 1%. But here is the thing, and I need you to hear me on this. That recovery is a hood ornament on a totaled car. It looks nice, but the frame is bent. 3 out of 4 stocks in the S&P still closed red. The VIX hit 28 intraday, which is the highest since November. The bond market volatility index screamed to 73.38. The bond market does not believe the stock market recovery. Bonds are pricing in chaos while equities are pretending a social media post fixed everything. The 10-year yield whipsawed below 4%, then ripped back to 4.10 on oil inflation. The dollar is a wrecking ball pushing toward 99.18. Prediction markets have full U.S.-Iran war odds at 72%. And in the middle of all this, Trump told Congress pass a crypto custody bill in 48 hours or he forces it. Same day, he ordered Navy escorts. That is the world right now. The number to watch tonight is $80 on West Texas Intermediate crude. If WTI crosses and holds 80, the stagflation story becomes math, not theory. Rate cuts die. Risk assets bleed. That is the line in the sand. Stay with me. Next up, we are going inside the blockchain, because what the whales are doing right now with their Bitcoin is a war. Inside a war, and you need to see it. While the world watches bombs drop, there's a full-scale war on chain that nobody's talking about. Librarian and Man of Steel both lit up tonight. Bitcoin sitting at 68,445 to 68,770 touched, 70,000 rejected upper wick on the daily. But while the SP bled 2.5% and the Dow dropped 1,200, Bitcoin held. It absorbed the shock. The reason is one number, $458 million. That's what flowed into U.S. spot Bitcoin ETFs. March 2nd, BlackRock's IBIT took $263 million, 58% of all flows. Fidelity 94.8, Bitwise 36. 0 outflows across all 11 products. Not one fund saw money leave on a day the world priced in war. Ethereum ETFs pulled 38.7 million, Solana 17.4. The institutional bid is accelerating into chaos. But Librarian is flashing a massive contradiction. One side, 458 million in ETF accumulation. Other side, the Binance whale ratio hit 0.64, 9-year high. $8.8 billion in whale deposits to Binance, highest since early 2022. Two armies, ETF buyers loading through regulated wrappers, spot whales shipping supply to exchanges to sell. That's why 70,000 won't break. ETF demand absorbs whale distribution, price equilibrium at 68K. Librarian found two whale cohorts, short-term traders distributing to Binance selling the rally. Long-term holders who added 120 billion at average cost 98K now, 40 billion underwater not selling, conviction at institutional scale. Sailor bought another 5,000 BTC. MicroStrategy holds over 720,000, 3.4% of total supply, 13 straight weeks. Man of Steel caught this 1.2 billion in BTC, and ETH fled Iranian exchanges in 4 hours. Capital flight from a war zone into the network. That's survival. Retail is gone. Inflows dropped 36%. Classic accumulation, smart money loading, dumb money running. ETH at 1987 below the 2000 cycle level. $1 billion liquidation wall at 1911. Solana in full capitulation, down 30% monthly. TVL from 9 billion to 664, revenue down 30%. Stablecoin supply 310.6 billion, flat 5 months, not exit. Dry powder waiting for the gate. Supply shock index BTC 58 out of 100, ETH 38, SOL 55, no squeeze yet. Section 3, the Solana trenches, 337 pairs scanned, a wasteland with one survivor. This is where we pop the trunk and show you what tools we are working with going forward. Because knowing what happened today is one thing. Knowing what is coming next is how you stay ahead of the pack while everyone else is stuck in traffic. And I need to start with the tech and AI side of things, because what is happening right now in that space is not separate from the crypto story. It is the same story, and most people are missing it completely. The Anthropic ban is real. This is not rumor. Defense contractors are actively ripping Anthropic technology out of federal systems right now after Trump's executive action. We are talking Lockheed and other major contractors pulling the plug. Anthropic has been labeled a supply chain risk by the federal government. That is a death sentence for any company trying to work with Washington. And here is what makes it wild. While all of this is happening, their app is #1 on the Apple free apps chart. People are downloading it out of curiosity because of the drama. And the platform had 2 outages in less than 24 hours from the traffic surge. So you have a company simultaneously getting banned by the government and going viral with consumers. That is a contradiction you do not see very often. Now, OpenAI is rushing to fill that gap. They amended their Pentagon deal and added an explicit no mass surveillance on Americans clause after backlash. So the military AI musical chairs game is officially underway. Whoever wins that contract pipeline controls the next decade of defense intelligence infrastructure. And employees at Google and OpenAI are circulating internal letters demanding stricter limits on military AI use, especially after the Iran strikes. This is the first real test of who actually controls frontier artificial intelligence. Is it the labs? Is it the government? Is it the employees? Nobody knows yet. And that uncertainty is creating massive opportunity in the decentralized AI space. Because here is the trade. While all of this centralized AI drama plays out, the decentralized AI tokens are ripping. TAO, FET RNDR up 12 to 25% today, while traditional AI stocks are dumping on war plus energy fears. The narrative is clear. If governments can ban one AI provider overnight and force contractors to rip it out of their systems, then centralized AI is a political risk. Decentralized compute becomes the hedge. You cannot ban a decentralized network the same way you ban a company. That thesis is pricing in right now in real time. Now, on the hardware and infrastructure side, Apple dropped the M5 Pro and Max MacBook Pro with up to 8 times the AI performance compared to Moan. That is a generational leap in local compute power. What that means for us is that running AI models locally on consumer hardware keeps getting more viable every cycle. The big cloud dependency is slowly cracking. China just officialized their first national standards for humanoid and embodied AI. Full lifecycle framework from development to deployment. Honor debuted a walking humanoid robot at Mobile World Congress, alongside what they are calling a robot phone concept. Xiaomi has humanoid robots in factory trials right now, targeting large-scale deployment within 5 years. This is not science fiction anymore. China is building the regulatory and manufacturing pipeline to put humanoid robots on factory floors and eventually in homes within 12 to 24 months for early deployment and 5 years for scale. If you are not paying attention to embodied AI, you are missing one of the biggest infrastructure shifts of the decade. NVIDIA invested $2 billion in photonics firm Coherent for data center optics. The bottleneck is shifting from chips to connections between chips. The data center build-out is hitting $1 trillion CapEx wave, and reports are flagging that AI, water, and power demand could double. Without fixes, we are looking at regional bans or nuclear pivots within 3 years. And speaking of orbital, SpaceX orbital data center comment period closes March 6th. If approved space-based AI bypasses Earth power and water entirely within 3 years, that reshapes the data sovereignty debate completely. Connect the dots. Anthropic purge persists means sovereign AI fragmentation in 6 to 18 months with costs up 20 to 40%. China humanoid standard scale means 15 to 25% of warehouse and manufacturing jobs automated in 1 to 2 years. $1 trillion CapEx without power fixes means the industry goes nuclear or goes orbital. No door number 3. Now the forward playbook for markets. 3 scenarios, base case and most likely. The market grinds in a volatile holding pattern. Hormuz stays dangerous but not fully sealed. Oil pins between 75 and 80 on WTI. Stocks chop sideways as delayed rate cuts sink in. Bitcoin and Ethereum keep absorbing steady institutional money while nobody is looking. Yields stay sticky above 4%. Nobody wins clean, but nothing breaks. Think of it like a car idling at a red light with the engine revving. Lots of noise, no movement yet. Bull case. Diplomatic back channels secure a safe passage deal in the Gulf. Oil drops below 70. Friday's jobs report comes in Goldilocks. Soft enough for rate cuts, strong enough to avoid recession panic. The fear gauge collapses below 15 and risk assets rip as every short seller on the planet gets carried out on a stretcher. Bear case. Asian refinery declares force majeure. Japan's market collapses 5%. Central bank dumps treasuries to save the yen, driving our yields higher. 10-year spikes to 430. Credit spreads blow out. ETF buyers capitulate. Bitcoin below 60,000 on cascading liquidations. The triggers to watch. If Hormuz gets physically sealed with a sunk tanker or mines, then oil goes over 100 and stocks correct 10 to 15%. Direct naval combat between the US and Iran means the fear gauge breaks 35 and bonds go haywire. Hot inflation print means every remaining 2026 rate cut gets erased from the table. The key contradiction from tonight must resolve. 458 million in ETF money flowing in on one side, 8.8 billion in whale money flowing to exchanges on the other side. Either the whales stop distributing and the supply squeeze reignites, or the institutional flows dry up and distribution wins. Watch exchange reserves. If they start dropping while ETF inflows continue, that is your green light. If reserves keep rising, 66,000 is the next floor test. Ethereum has $1 billion liquidation wall at 1911. That level is a magnet and the market makers know it. Below that, everything cascades. Solana needs to reclaim 95, 96 on the 20-day moving average, or the downtrend stays intact. And March 18th, the Fed decides on rates. That is the event that breaks this equilibrium one way or the other. Everything between now and then is positioning. My posture tonight, high vigilance. This market is surviving on headlines and interventions, not on fundamentals. Bitcoin is passing the digital gold test under live fire conditions. But until the Hormuz situation resolves, every single relief rally is suspect. Accumulate smart, stay defensive on anything long duration. Protect your capital. Do not chase. That is the full report. Every signal, every scan synthesized into one picture. This is intelligence the street does not have, and you just got it for free. Smash that like, subscribe, hit the bell, share this with someone who needs it. We do not do hype in this garage. We do homework. Guru Crypto Garage. Stay safe, See you tomorrow night, and let it rip.